So now that the CPI is coming out soon this week, I'm going to go over a few charts with you for the Dow Jones. And I'm going to choose the Dow Jones specifically because the SPX and the NASDAQ, they are breaking out into all-time highs, but the Dow Jones still is not. It's kind of a laggard. So I just want to go over this to show you that whether it's the CPI or other data points or any other news, it just doesn't matter. And we can just use the Ichimoku and the SMAs just to see market direction from the past CPI reports. And going to the past CPI reports, all these blue vertical lines are when the CPI was reported. So essentially, we'll start here back on November 14th, 2023. And we'll just see, okay, so price was here before it was released. Price closed here, right? The day before, price closed right above everything. Right above everything. It closed above the 100 day, the cloud, the 50, the 200, everything. It made the chart 100% bullish right there. And what do you know? Next day, it just went up and up and up and up and up. And then we have December 12th, 2023. And same thing, it's 100% bullish above the conversion line, baseline, above all these moving averages, the 50, the 100, and the 200, right? So it just continued higher. Then we have January 11th, 2024, and once again, the day before it closed there. And so that means the day of, it just wicked down and touched the baseline, or sorry, the conversion line, and then it closed right where it kind of closed the day before. And then it came down a little bit, but continued its journey higher. So that leads us to the next CPI report, which happened on February 13th of 2024. And the day before it closed 100% bullish, but this one came back. And if we remove that line right here, we can just see it just wicked down to retest support of the baseline, right? It didn't really do anything, and after that it still continued higher, right? So no matter if it went down or not, it still was maintaining the structure of going higher. So we can just put that back on right there, and then we can see the next one was March 12th, 2024, and the day before it closed right in the middle of the conversion and the baseline. And then the next day, what do you know? It went above and then retested baseline to continue its journey higher. And that leads us to the next one, which is April 10th, 2024. And what do we see happen here? Well, the day before, it started to wick down to the cloud, and it even closed a little bit below the 50-day moving average, right? So with this bearish engulfing below, and now it's kind of acting as resistance, that's kind of a warning sign that, hey, this thing probably is going to go lower for CPI. And what do you know? It opened in the cloud, went back down, and went below the 100 a little bit, and went lower, right? The bottom line is the indicators were saying that it was going to go lower. Here, every single CPI, the indicators were saying is probably going to continue to go higher. Maybe not the same day, like right here. It wasn't the same day, but it still continued higher. But here is like, okay, this is a warning sign. It's probably going to go lower with that CPI. And sure enough, it did, right? And that leads us to the next CPI, which was May 15th. And this was above all indicators the day before. And then on the announcement, we see that it essentially went up for a few days for the rest of that week. And then it rolled over down, right? And that will lead us to going into the CPI that's on the 12th of June, right? And that is going to lead us right here. So today, the market closed above the 50, above the 100, and above the cloud, and above everything. So we'll see what price does tomorrow, or I guess today, and since I'm releasing this video on the 11th, yeah. So we'll just see that what happens with today's closed for Wednesday's CPI, right? But if yesterday is any implication of what's going to happen today, then it'll probably just stay within this range right here until the report tomorrow, which it looks like support has already been found in this zone right here. And especially if you look at the chart, there's a low, there's a higher low, there's a higher low from here. So this zone right here is looking like it could hold. So could it wick on Wednesday down to the bottom of the cloud, maybe at 38,476? Yeah, it could, right? But just like we saw before, one day doesn't signal a trend change or anything. So even if it goes down here and closes, the trend is still higher lows. So it could even come down a little bit further to make a higher low from here. But the indicators are showing that this is once again a little bit bullish. See, here we saw a candle close below the 50 for 1, 2, 3, like around the 50 for 4 days in a row, right? And then that was a warning sign that it's not going to go higher because you still had the resistance of the conversion line and the baseline up here. So that was the indicator. So now we're looking like we have support of the 50, the 100, and the conversion line, and the bottom of the cloud. The only resistance there is the baseline right here. So it's looking more and more likely that this CPI, it could wick a little bit lower, but it should just continue the trend higher later on in the week or into the weeks to come. So now I'm going to switch gears to show you the Dow Jones on linear scale from the crash, the very bottom of like 1932, right? We can see what GAN has done since then. And in the beginning stages, it really doesn't show anything, but once it starts making moves to the blue angle and the orange and the blue and the gray and the blue, we can see that it's going through one level at a time. And it went up to the orange level here and then the blue level here. And with the orange level, it went to here in 2014, came back down in 2016, retested it perfectly. Then it came up here in 2020, and the COVID crash just essentially backtested the arc. And now what do we see? The blue level has been flipped to support, came back down during 2022, retested the 45 and the blue level, and it held. And now we see the resistance of the top arc. And it's kind of, when we zoom in a little bit, it's kind of in the middle, right? It's kind of in the middle of this zone. There's the support of the arc, there's the resistance. So when we look at the monthly chart, it still has room to go higher before it gets really rejected. So judging by CPI, it's probably going to be nothing. Like, it's going to stay in a range, and no matter what, like worst case scenario, this is going to be support, like 36,000, 37,000. That zone is going to be support, no matter what, in the future, even if it does trend down a little bit more in the future, right? So, which kind of lines up with the previous all-time high right here, the previous one back in 2021. So what we really see now is it's in a range and nothing's going to happen. And the CPI reports is just noise, just to scare people, just to have talking points, essentially. But now let's switch gears again and go to the log scale of the Dow back from the very beginning of time. And now we can see that log scale from the Dow Jones back in the beginning of time in August, September of 1896, way back here. I showed this chart before, but I rescaled it just a little bit to get it more precise for you all. And I want to show you some important things here from the very beginning of time with the Dow Jones, how everything was mapped out so perfectly. It's like you won't believe it. We are in a simulation, and it's just proof that no matter what, these news narratives, these talking points, they don't even matter, right? So what do we see the first level? Where do we see that at? Well, the 1929 crash, right? Like, this is the 45-degree angle, and we can see how important that was just by looking at it as a resistance and a support. But the very first level was right at the 1929 crash. And it did wick above a little bit, but it ended up coming back down. And once it lost the 45, it went all the way down to the red angle down there, right? But then that was the bottom. Then the recovery started to happen, and then it went back up to that level and never looked back, right? Then it was the 45 was resistance the whole time for a long time. And it even, during that process, it even came down to retest the arc a couple times before flipping the top arc from a resistance. It was resistance like right here, right? And then it flipped it to support right here. Let's zoom in a little bit so you can see it. So yeah, it was a resistance, flipped it to a support, and where do we see the next crash? What really happened? Well, the 1987 crash right here, right? What do you know? It hit the 45-degree angle after how many years? So the last time it touched the 45 was 1966, and then it touched the 45 again in 1987. So from 1966 to 1987, that's almost 20 years, a little more than 20 years, right? So essentially, it hit that again, rejected it, and then it fell. So that was a resistance point right there. So who cares what the news narrative was? That was a resistance, right? And we'll go even further. Then it got to the blue level right here, finally. Stayed there for some months, came back, and finally, right there, in maybe 1993 is when the 45 was flipped to support. And we can see that by not breaking below. So then that means there is no need to retest that because the 45 became support. Then it went through the arcs, was resistance right here, confirmed it as support, and flipped it as support. Then what happened? Well, we come back here. And we see price gravitating towards this next level here, right? But what happened before that? Well, where are we in time? Well, oh, it's 2008. 2008, what's going to happen? Oh no, it just retested the 45, right? So who cares what the news narrative was? It just tested the 45. And that leads us to current day, where we finally got to that level up there. So from 2008 to 2021, finally got to the next level. And what do we see price doing now? Well, is it bearish? No, it's not. It's not bearish at all. What do we see the Dow Jones doing from, this is the whole beginning of time of the DJI, the Dow Jones, and it's essentially just flipping this as support. The next level is flipping as support. So that means, could it come back and retest there? Like I said before, yeah, 36, 37,000, it can. It can come back and test this line, but it just matches up with my other charts that I showed you before. So worst case, the Dow Jones could go down to 36, 37,000, but it's really ultimately going higher. And it's just more and more proof that no matter what you see, what you hear, what data points there are, it just doesn't matter. Like, just look at the chart. The chart is telling the story, and the story says that everything is going much higher. And before we go, I just want to show you one last chart. So the last chart I'm going to show you right here is the NASDAQ composite, and on the monthly chart. And this is the 45. And what do we see? Wow, it came here. The 45 was resistance for a while, came up to the first level, got rejected, then finally flipped everything. This was back in 2018, and during COVID, what do you see? Oh, it just came back down to retest the 45 right there as well. And what do we really see? Well, back here in 2021, went up to the next level, got rejected by this angle too, and that level came back down. But what is really happening now? What do you see? Well, the NASDAQ composite is flipping this angle right here from a resistance to a support, right? So this is just more proof that things are going higher. And what's the next level for the NASDAQ? Well, it's all the way up here at 24, 25,000. And that's for the years to come. That's not going to happen immediately, just like we saw in the past. But bottom line, ignore the talking points, the data points, whatever. Let the charts tell the story. And this is proof right here.